All right, fix that. All right, so we're gonna go ahead and get started. I'm gonna kind of introduce myself for a second here to give a couple stragglers a little bit more time to join, and then we'll get into it. Kind of the process for this entire presentation is to go over the home buying process pretty much from A to Z, beginning, you have no idea how to buy a house or anything about it, to actually closing and kind of the finishing steps once you've closed on a house. So just to introduce myself, my name is Wilsterman. I am a realtor or a real estate agent with Savvy & Company here in Charlotte. I moved to Charlotte about 3 years ago, so I'm also a transplant. Originally from Pennsylvania, and I grew up there. I went to college at Clemson University, where I got a degree in civil engineering. That's there. Obviously, I don't even really use that anymore. I was an active civil engineer for 3 years working in consulting. And during that time period, I kind of realized that I wanted to do something else. I bought my first townhome and started to renovate that. And that went okay. Really learned a lot from YouTube and a lot of other people about how to renovate a house. And that turned into a rental property. And once that happened, I kind of knew, okay, real estate is where I want to be full time. I then got my North Carolina real estate license. And since then, I've been full time selling real estate. I absolutely love it. I love the Charlotte area. I currently live in a house in Beverly Woods, right in the South Park area. I just finished up renovations on that a couple months ago, so kind of happily in my office. But that's kind of a little history about me. Throughout this presentation, I do feel free to reach out in the chat or unmute yourself and ask questions. You can unvideo yourself or actually open up the video too. That's cool. Whatever you want to do, whatever you feel comfortable with. Ask questions throughout the whole thing. I'm happy to answer. I'm probably going to break up the presentation into 6 parts, hence the 6 kind of major road blocks getting to home ownership. And after each one, we're going to open it up and I'm going to try and answer all those questions. But once you have a question, just fire it away in the chat box or reach out to me and I'll get it right away. So any concerns or anything initially based on that overview of what we're going to do in the next hour? No? All right, that's good. And everybody can see my screen, right? We'll take that as a yes. Sweet, thanks. All right, so welcome to buying a house. This is a really exciting process. I absolutely love the home buying process. Majority of who I help purchase real estate are first-time home buyers. It's kind of my niche that I've done really well with. It's a overwhelming process to start for sure, but I think with someone walking you through it, I've helped lots of people get into their first house, and a lot of people they have a great experience with it, and they're very happy that they did so. So to dive right into it, that's all right. We're going to pause 1 second. At least let me give you an overview of quick timeline, how long the home buying process takes. So to get from step 1 all the way to step 6, I want to go over that it's going to take anywhere from, at a minimum, kind of 30 to 45 days, all the way to, a year, 2 years. It all depends on how long you spend on this house search stage. In general, the mortgage pre-approval stage, this step number 1, usually takes about a week to 2 weeks, depending on how quickly you can get all the paperwork together for it. We'll go into that in a second. The home search process, anywhere from a day to years. That all depends on what exactly you're looking for. Going under contract, that's just the process of actually getting a contract accepted. So that's a couple days. The due diligence period is usually about 3 weeks. Closing preparations is usually about a week, and then actual closing is just a day. So from going under contract on a house to closing usually takes about 30 to 45 days, but that is something that you specify when you're actually writing the offer. So in total, this process at a minimum I tell people 45 days at the absolute minimum. If you are on top of it and we find you a house and we get you under contract right away, that's about the minimum that it can take. And it can take as long as a year. I've worked with people for a long time before we actually ended up purchasing a house, but trust me, the process is worth it. So let's dive into step number 1, which is mortgage pre-approval. Hopefully this little thing works. A little laggy, but that's okay. Oh yeah, very laggy today. Come on, Prezi. All right, mortgage pre-approval. This is arguably one of the more boring steps of the entire home buying process, but I will put it out there, it is usually the most important. The mortgage process is making sure that you can understand how much you can afford, and it's something that's necessary in order to make offers on houses. It is a step that you really need to do in order to understand the additional expenses of purchasing a house, understanding, what that down payment is going to be, what the closing costs are going to be, what's actually included in closing costs, what due diligence is going to cost, and finally figuring out what a monthly payment is going to be to make sure that you're purchasing a house that you can afford. So the mortgage pre-approval process is kind of boring, and it's probably the most technical aspect of this entire home buying process, and that's kind of why I want to get it out of the way first. And also, I get it out of the way first because it is usually it's the first hurdle that people need to get over in order to actually get into the home buying process. So when you're applying to get a mortgage or to get a mortgage pre-approval, the first thing that you need to do is to reach out to a lender, a mortgage lender. I have a lot of contacts for that. I have a lot of people that, I'm sure you can get advertisements. You can Google online mortgage lender and you can find thousands of them. But in general, I have a couple of contacts that I like to work with, but I know them personally and I've done well with them. But they're essentially going to ask you for your income, your expenses, and they're going to do a credit score poll. So what a mortgage lender is looking for in order to give you a mortgage pre-approval is they're looking for your debt to income ratio. And what I mean by that is essentially how much do you make every month? How much do you have in reoccurring expenses every month that you have to pay? This doesn't include like groceries and extraneous spending, going to breweries. That's not considered an expense. That's a reoccurring expense. Reoccurring expenses, I mean like credit card bills and your car payment and your student loan thing. So debts that you have outstanding debts. So that's what a lender is generally looking for. And then they're also going to look for your credit score. Credit score is going to be pretty important when you're applying for a mortgage. It generally determines kind of what type of interest rate you're going to end up with. They're basically trying to figure out how risky of a loan that they are giving you is. And they're going to ask for, unfortunately, probably a lot of documentation for all of your finances, all of your income. But they're also lending you hundreds of thousands of dollars. So it is, kind of have to give them those documents. So another thing that I want to just touch on while I'm talking about credit score, when you're applying for mortgages, I would say do it early and apply to multiple different lenders in the first couple of weeks. The reason I say that is that when you're shopping for a mortgage, each one of them is going to pull your credit score. So let's say you talk to 4 different mortgage lenders, all 4 of them pulled your credit score, but what's actually going to affect your credit score is only going to be one single pull if they're all for a mortgage, and that's that you can shop for different mortgage lenders. So a lot of people kind of get hung up on this stage of, do I want to get pre-approved for a mortgage? And they want to buy a house, but they get hung up on the mortgage pre-approval thing because they don't want to have a credit score inquiry, and that can affect your credit score and bring it down a couple points. But trust me, it is worth it, and it's only going to affect your credit score once. So apply early and get this mortgage pre-approval as quickly as possible. It is kind of the first step in order to understand the actual expenses of purchasing a house. So let's talk about down payment and lending costs. still a little laggy. Sorry. So how much do you need to put down? This is going to be a question that you're going to have to talk to a mortgage lender about, especially when they're talking to you about, what type of house you want to buy and how much house you can buy. First off, you don't need to put down 20%. Back in 1970, when our parents were first buying houses, everybody put down 20%, but that's because interest rates were at like 18%. That's not the case anymore. They're more like 4%. They actually just creeped over 4% for the first time since I think 2019, the last couple of weeks. So interest rates are really low, and the average first-time homebuyer in 2021 only put down 7%. And you might be curious, okay, how did somebody do that? Well, that's because there's different types of loans out there that you can apply for. A VA loan, which is a veteran's loan, that one they're allowed to have a 0% down payment. That's only available if you're a veteran. Obviously, if you are, you talked about that. FHA mortgage, which is basically a federally backed mortgage, the minimum down payment is 3.5%. A conventional mortgage minimum is 5%. Traditionally, there are actually some programs out there that end up with a conventional mortgage down payment all the way down to around 3 to 4%. I would bank on 5% if you're doing financing behind it. I'm not a financial advisor, don't hold me accountable for this, but I would bank on 5% for a conventional mortgage. So you don't actually have to put down 20%. The big concern with not putting down 20% is something called PMI. And PMI stands for Private Mortgage Insurance. So when you are putting down, or when you take a loan out on a house or a mortgage, if you don't have 20% equity or a down payment of 20% or more, you're going to get assigned something called private mortgage insurance. Private mortgage insurance is kind of annoying to a lot of people, but from the lender's perspective, they're essentially forcing you then to pay for a insurance policy against you defaulting on your loan, which seems silly. They're basically making you pay for insurance that you're going to get no advantage of. It's an insurance policy that the insurance company gets to take advantage of. But welcome to lending. If they're going to give you $300,000, they're going to try to protect themselves somewhat. So fair. So PMI is usually something that is feared by a lot of people, but in reality, it is a pretty inexpensive cost comparative to the rest of the house purchase. Now, I can't give you a direct quote on like if you were to purchase a $300,000 house and you took 5% and you put 5% down, your PMI would be X. X is very variable on, once again, the down payment and your credit score and your debt to income ratio. So your PMI will vary, but in general, I would expect it to be, $50 to $150 a month, which, is not that much when you compare it to a $1,900 mortgage. So if it helps you to purchase a house earlier by buying into the real estate market with a 5% down payment, rather than waiting until you have 20%, that $150 a month, penalty is probably worth it because you're probably going to make up that difference in appreciation over the course of, the couple years that you could have bought sooner than having to wait till save up to 70 or to save up to 20% in order to purchase a house, if that makes sense. Hopefully that was, I was a lot of numbers and I was talking a lot there. So let me know if that was very confusing. So that's the down payment side of things. When you go and you're talking to a mortgage lender, talk to them about what they think the options are for you in terms of a down payment, because they'll look at your debt to income ratio and they'll be able to talk to you about how much you can afford based on how much you're willing to put down. So once again, you don't need 20%. Now, closing costs, typically in North Carolina, closing costs in order to purchase a house range between $5,000 and $8,000. This is usually split up between lending fees, attorney fees, and other upfront costs. So to some extent, you need to pay taxes for the year on the real estate. That's included in that $5,000 to $8,000. Now that's a rough estimate. If you're buying a $1.3 million house, it's going to be higher than that. But if you're purchasing, a $300,000, $400,000 house, it's typically where you're going to land. That includes, the cost of the lender. So the lender is going to charge some fees in order to actually procure the loan. And the attorney is going to charge some fees in order to actually close the home for you. So the one who prepares all the documents. And there's going to be some other upfront costs as well. Like I mentioned, taxes. You're going to have to start the taxes. Well, mainly that's going to be the main thing. So typically $5,000 to $8,000. Once again, when you get pre-approved for a mortgage, talk to the lender and ask them what your closing costs are going to be. They can typically predict that for you, or predict roughly based on how much you're putting down and what their costs are, and what they usually can predict what the attorney fees are going to be, and kind of what the additional fees are based on the type of house you're looking for. So hopefully that's a little bit helpful on understanding how much you need to put down and kind of what the closing costs are. The final thing I want to touch on here on mortgage pre-approval is preparing to pre-approve. There's a lot of pre's going on there, but all right, so pre-approval process. So this little page here just goes over kind of what they check for. They're going to check for they're going to do a credit inquiry. They're going to verify your income. They're going to check your bank accounts to verify that you have funds to actually purchase their house. And they're going to look at your employment history. They're usually going to look at around 2 years of employment history to make sure that you have a stable job. So in order to do that, you need to prepare a couple documents for them. They're usually going to ask for recent pay stubs that cover at least a month of history. They're going to ask for recent bank statements that cover at least 2 months of history. Let's try to check to make sure that you have sufficient funds. And another reason that they put in 2 months history is that they want to make sure that there's not any strong discrepancies of let's say there's a huge cash influx of $30,000 out of nowhere and you can't really explain that. That's going to be sketchy to the lender because they're like, how'd you get $30,000? Is that consistent? So that's why they ask for 2 months of history. If you are getting a gift from a family member and you're going to use that to purchase a house, usually you have to season that, which basically means hold it in the bank account for longer than 2 months in order to use that as a house purchase, because then the lenders won't question that. So that's why they ask for 2 months. And then they'll ask for 2 years of W-2s or 1099s, depending on the type of employee that you are or self-employed. Right here, I have Taylor Craig. He's with Guild Mortgage. This is a mortgage lender. I think very highly of him. I've actually had him on these first-time home buyer webinars a couple times. He's really good at his job, and he is great with first-time home buyers. He is really good at explaining the lending process. I've been very happy with him, working with him, and the past transactions that I've done. He always answers my phone call. Literally, he carries his laptop around the golf course, and he will be able to answer phone calls and do things even when he's golfing. I mean, he's fantastic. Reach out to him. I will have his number and contact information at the end of the presentation again, and I will send it out to you. If you're looking to get pre-approved, which is your number one step on buying a house, call him or email him. Or if you're not very social, he also has just a web link where you can upload all of these documents and apply it on that side of things. I'm an engineer and I can occasionally be slightly awkward, so I always give that option. So usually it takes 7 to 10 days to get pre-approved. Most lenders have online portals to submit documents and information. Exactly, there you go. So that's the mortgage pre-approval process. So I'm going to zoom out, and that's kind of step 1 done. Questions from everyone on the mortgage pre-approval process. I feel like I just talked a lot. So reach out, you can unmute yourself or go into the chat if you have any questions on it.
Hi, Grant, this is Pat. I have a quick question.
Yes.
And first, thanks for doing this. But question around mortgage lenders and loans and things along those lines. So if I am hopefully buying a home with my wife, do you recommend that when we go to a mortgage lender or look for a loan that we do that together as a couple? Is there a way to do that? Or do you recommend someone do it by themselves as a sole lender? Wasn't sure if there's like a best practice or a recommendation around that.
Yeah, I do have a couple of recommendations on that. Also, quick question, was I echoing there? I realized I didn't mute myself. I don't know if I was echoing.
Nope, not at all.
Okay, great. So if you have a significant other that you're applying with, I would recommend, and once again, it's going to all come down to the debt to income ratio. Let's say, for example, you both are W-2 employees, you both are making, decent money, and you both have very low debts. And, you might as well just apply together because your debt to income ratio, your income, you're going to be able to have a lot more buying power in order to buy together. That being said, they're going to pull credit scores from both of you and look at both of your both of your income, both of your debts. Let's say your significant other has substantial student loan debts, or maybe has a weaker credit score. You can apply solo as like you can apply solo. Your debt to income, you're not going to have as much buying power because you don't have as much income. But if you're still only looking at a house and you can afford it based on your income alone, that is worth doing. And then potentially their credit score or their student loans or other things won't affect the actual interest rate or mortgage package that you're going to get from the mortgage lender. So to give you an example of that, this house that I'm in right now, I purchased it with my fiance. As a real estate broker, I am a 1099 self-employed, which means that I get paid as a commission only. And mortgage lenders tend to not love that because your income isn't as stable as someone with a W-2. So, and when we purchased this house, we ended up applying under only her income because she's a W-2 employee. She has no debts. So her debt to income ratio was great. And so we had enough buying power that we were comfortable only applying under her name. Now, some people get concerned when you do that because, it's, only one person's taking the mortgage and then the other person's also going to be on title. So, are they all tied together? And in North Carolina, yes, it's all tied together. It's not like one person can get away with having the real estate and not having any mortgage, and the other person will be stuck with the mortgage and the real estate, and maybe not the real estate. So it all depends on kind of your debt to income ratio, how much you are actually planning on purchasing or how much house you're planning on purchasing. And then I guess also scenario, it depends on the potential debts or credit score of your significant other or yourself. Does that answer your question?
Sure does. Thanks so much.
Okay, good. Any other questions relating to mortgage pre-approval?
Yes, this is Ebony Waterman. Thank you again for doing this. I just had a quick question. I know every year the FHA limits change. Is there not every year, but it does change depending on what's going on, I guess, in the world. But is there a limit now on what those are as far as how much house you can be able to do versus going into a conventional? It used to be a ceiling, like, X amount of thousands or whatever before you had to turn it into a conventional loan, if I'm not mistaken.
Yes, you are right about that. And I don't really I'm not 100% sure what the current FHA ceiling is on that. I would say reach out when you talk to the mortgage lender. I would talk to them about what that ceiling is. I know that the current conventional ceiling is somewhere around $700,000. And I believe the FHA's, don't quote me on this, I think it's closer to $400,000. But don't quote me on that one. I would talk to a lender on that. I'm not a lender, so I can't say exactly what that is. Sorry.
Yeah, no worries. No worries. Thank you. I appreciate it.
Yep. All right. Any other questions on that? Those are good questions so far. All right. We're going to move on to step 2 or hurdle number 2, or I don't know, step 2. Step 2 sounds more exciting. Step 2 is the house search, which I generally would regard as the most fun part about purchasing a house. This is the part where you get to tour a bunch of houses and, kind of envision yourself living in all these fun houses. It also is sometimes the most stressful time because it's overwhelming for some people. But house search process, let's get into it. Sorry, I'm gonna take a drink here quickly. All right. So you are pre-approved, and we're going to have a scenario where basically we're saying, okay, we're pre-approved for $350,000. I think the average sale price in Charlotte is right at $356,000 or Mecklenburg County. So $350,000. We're looking for a house. First thing to do is you are touring, you're looking online, and you are likely using Zillow or Realtor.com or maybe Redfin, I'm guessing, to look at houses. I'm going to take a quick stop and say, let me explain how Zillow, Realtor.com, and Redfin all work, because they all pull their house data from something called the MLS. The MLS is the multiple listing service. This is the platform that as a realtor, I have access to edit and to look at. And this is where all houses are listed for sale. So Zillow, Realtor.com, they are all pulling data from the MLS. So this is like delaying. Usually it's like 30 minutes to an hour. It's not substantial. And sometimes they don't copy information perfectly. So as a consumer, which is someone that you guys are buying a house, you're usually going to look at Zillow or Realtor.com. But once you get in contact with a realtor or real estate agent that you're going to be working with, they can set up a portal for you to get access to the MLS. And this is something that I highly recommend doing. The MLS portal is probably not going to be as user-friendly or easy to look at, to be honest. They just don't have as much money as Zillow and Realtor.com to be able to make their website as aesthetically pleasing, but their data and everything that's going to be on the web, on the MLS, is going to be 100% accurate and up to date at all times. This is the best way to look for houses. So that being said, in order to start touring homes and looking at homes outside of just looking online, you're going to have to start working with a realtor or a real estate agent. You can also go to open houses. Those are held on the weekends by the listing agents or the listing firms of these houses. And you can just walk into houses and look at them. That's also fun. Highly recommend it. But in order to set up a private showing of a house that is for sale that you're looking at, you're going to need to contact a realtor. So I am a realtor. I'm a real estate agent. This is my full-time job. I help people purchase houses, and I am regularly out looking and walking through strangers' homes that are listed for sale. It's not strangers' homes that are just like willy-nilly. I'm not just talking about those. It's people who listed their house for sale, and I schedule it online. So let's say you find a house on Zillow. It's 123 Main Street. It's $340,000. You are psyched about it. It was just listed for sale 3 hours ago. What do? So you are going to hopefully have met a realtor. And since you're all in this class, you've met me, I can help you out. You're going to send a text or an email to that realtor and say, hey, I want to set up a showing for this house, or I want to see this house. And the realtor or myself is going to go on essentially the MLS on the realtor side, and I'm going to access it and say, okay, I can set up a showing for it. What time do you want to see it? We set up a time, I arrange it with the sellers of the house, and we can go and we can tour the house. From there, we get to see the house and see if you like it. So it's really an easy process, and majority of my job is actually going out and looking at houses with people. It's a really fun part of my job. It's like HGTV every day. But that's kind of the process of actually going in and touring houses. I think some people get cold feet about actually going to see houses in person, but trust me, if you are considering purchasing a house, anytime in the next 6 months, start walking through houses, start making that connection with a realtor and becoming friends with them. You need to trust them. And touring houses is way different in person than it is online. I've seen a lot of houses that I look at the pictures online and I go, wow, this is going to be a sweet house. I see it in person and I'm like, oh, damn, the photographers are so good these days. Like, it's not as great in person as I thought it was online, or even sometimes vice versa. Sometimes people, realtors are not tech adept and they take horrible photos of a house. And then I go there in person. I'm like, this is a steal. This is a great house. I don't know why this hasn't sold. So start touring houses in person. The next question is, how do I hire a real estate agent? So as someone that is a first-time home buyer, this is likely the first time you've ever dealt with a realtor before or dealing with a real estate agent. quick side note, realtor versus real estate agent. Every realtor is a real estate agent, but not every real estate agent is a realtor, if that makes sense. It's like the squares and rectangles thing. Realtor is a brand that basically says you have to follow these code of ethics in order to maintain your realtor certification. Real estate agent is just someone who's licensed in that state to be able to sell real estate for another individual, sell or buy. So realtor, essentially just someone who is slightly more ethical or just held up to a code of ethics that's at a higher than just a standard real estate agent. I'm a real estate agent and also a realtor. So real estate agents are like your personal home buying coaches. I would approach having a realtor as like having your own coach to go through this entire process. It's really important that you get along and you trust them and that you feel that you have good communication skills with them. They are going to be your coach through this entire process, basically from the pre-approval process and touring houses to the end when you're closing the house. They're going to be with you the entire way. So first question, do you get along with them and trust them? I would always ask yourself if you're trying to find a realtor to work with. Person, they're going to help you make the likely the largest purchase of your life. Really important that you actually like them. Next question I like to have people ask is, do they have your best interest in mind? Yes, realtors must represent you and your interests first and foremost. So as a client or a consumer, it sounds sometimes weird to say that you're a consumer, but you are, when you're buying a house, you are a consumer, you consume the house. So when a realtor or a real estate professional like me, when I start, working with you as a buyer, we need to go over a couple things before I can actually start working with you. Mainly the first two is a document called Working with Real Estate Agents, which is a document that describes that I'm a buyer's agent for you and that there's also a seller's agent on the other side of the transaction. And then I'm also going to have to go over a document that basically says that I'm going to be a realtor for you and I'm going to represent you and your interests first and foremost. This is called a buyer agency agreement. This means you're hiring me as your realtor, and essentially I can't disclose any information that is confidential for you to the sellers. So I'm not undermining you at all during this process. I represent you and your interests first and foremost. So just get that out of the way. Realtors tend to have they're pretty low rating on the trust factor of, professions. I think it's like, politicians and lawyers are like pretty low on that. But realtors and real estate salespeople, they tend to also be pretty low on the trust factor. And I'm trying to change, I would like to change that. I think that you should trust your realtor. It's really important to, once again, they're helping you purchase, one of the biggest assets of your life. They are legally bound to represent you and your interests first and foremost. So, final thing, do you need one? No, you definitely do not, but it's highly recommended. Real estate agents are usually paid for by the seller. So as a first-time home buyer, it's going to cost you absolutely nothing to have a realtor work for you. A real estate agent or realtor is going to get paid for by the seller, and those sellers agree to how much they're going to pay these sellers these buyers agents before they even list their house for sale. It is a free service. Please take advantage of it and buy more intelligently, because I close 20 plus houses a year. It is important. I mean, I do this a lot. I'm doing this every month. I can provide valuable information to you to be able to make your home buying experience a little bit smoother. So that's kind of a quick overview of the home buying process, or the home search process. So how to find houses, how to work with a realtor, and how to end up getting to finding a house that you love and you want to make an offer on. Are there any questions on this section? Kind of working with realtors or understanding, how to go from seeing a house online to touring it and deciding I want to make an offer on this house. No questions. All right, I'm gonna take a sip of water. All right, no questions. Wow. Sweet. So now we're moving on. We're driving down. We found a house that we love. Great. It looks like that. And now we're going to talk about going under contract or making an offer to purchase a house. So step number 3. All right. You found a house that you love. This house, 123 Main Street, is fantastic. It's exactly what you're looking for. It's 3 bedrooms. It has the perfect backyard for you and your 43 dogs. Just kidding. You probably don't own 43 dogs unless you have, maybe you do actually. I have no idea. But found the perfect house. So you want to make an offer on it. There are going to be a couple things that you have to decide when you make an offer on a house. And there's also, okay, we're just going to go over these things quickly right here, and then I'll get into this whole due diligence fee, earnest money deposit. This is the most confusing part of making an offer on a house, but we'll get into it in a second. So when you make an offer on a house, I like to say there are about 6 things that are really important in order to decide on when you're making an offer on a house. First and foremost, the purchase price. This is the most obvious thing. This is what everybody thinks of when you're making an offer on a house. Realtor can help you decide that. Next is something called the due diligence fee and earnest money deposit. We're going to go over that in a second. Then the due diligence date, which is the date that, once again, it kind of relates to your due diligence fee. And then the settlement date, which is the date that you close or actually officially purchase the property. You're gonna have to decide that when you're making an offer on the house, as it is something that the sellers will consider when you're purchasing. And then also you need to figure out personal property. So when you make an offer on a house, you have to write in which items in the house you want to come with it. So in terms of personal property, I have a couple of rules of thumb that I like to go over quickly. Oops, I just clicked on that and it zoomed in. I'm sorry about that. Oops. So personal property. I'm so sorry. The fridge, washer, and dryer and furniture are all considered personal property. So when you're writing an offer, I usually always write in that, oops, I'm so sorry. We're just really laggy here. That we always write in that the fridge, washer, and dryer are going to come with the house, or we specify that. Now, things we don't have to specify are things that are screwed into the wall, like a TV mount is actually considered a fixture, so it comes with the house, so you don't have to write it in. The TV, personal property, but the mount that's actually screwed in the wall, that belongs and stays to the house. Same with your stove, so the actual stovetop and oven, those come with the house regardless. And then microwave, as long as it is screwed into the house, that comes with it regardless. Dishwasher comes with the house regardless, but weirdly enough, fridge, washer, and dryer do not. You have to write those in. Quick spiel on that. So those are kind of the 6 main things that when you're writing an offer, you're going to have to decide on your realtor, or maybe me, is going to go over with you in order to help make this offer and to try to get this house under contract. So due diligence fee and earnest money deposit. These are both only due upon an accepted offer. So it costs you nothing in order to purchase, or sorry, it costs you nothing in order to submit an offer onto a house. If that offer gets accepted, that is when you have to write what is called the due diligence fee and the earnest money deposit. Now, the due diligence fee, or DDF, is going to be a non-refundable fee that you pay to the sellers. It's usually about 0.5% to 2% of the purchase price. And this fee is essentially an upfront fee that you're paying to the sellers to put the house under contract and take it off the market. It's a way for you to tie up that house to say, I want to purchase this house for X amount, which is, the purchase price, and close by X date. This due diligence fee is non-refundable. Essentially, I would expect, once you go under contract on a house, you can always terminate as a buyer for any reason whatsoever because, I don't know, you sneezed funny one day and you decided you don't want to purchase this house anymore. You can terminate that contract, but you're not going to receive this DDF back, this due diligence fee. This due diligence fee is this 0.5% to 2% though, also it isn't in addition to the purchase price. So it counts as part of your down payment on the house when you close on the property. So that's important to understand. It's not going to be in addition to. So let's say you're purchasing a house for $100,000 and you put 2% or $2,000 in due diligence fee. It's not like you're going to pay $102,000 for this house. You're still going to pay $100,000. You just have to write that $2,000, or you have to pay that upfront right when you go under contract, and then it gets credited back to you when you close on the house. So hopefully that makes sense. Now, the earnest money deposit. This is going to be another fee or deposit that you have to make when you go under contract on the house. This is a refundable fee though. So this fee you can get back, or this deposit you can get back if you terminate the contract within the due diligence period. Now that's where this due diligence date comes into play. So if you go under contract on this house, you write the due diligence fee, that goes off to the sellers to buy. And then your earnest money deposit, you write that goes into an escrow account. Somebody holds that, basically a third party will hold this earnest money deposit. And you set the due diligence date of 3 weeks from when you go under contract. So your due diligence period is that 3 weeks between going under contract and that due diligence date. So 3 weeks, you have 3 weeks in that. Anytime in that due diligence period there, those 3 weeks right there, you can terminate the contract. You're going to lose that due diligence fee, but you're going to get that earnest money deposit back. So that will come back to you. The reason that will come back to you is essentially the due diligence fee is like you're paying this to go, to have the sellers take the house off the market, and for you to be able to perform your inspections on the house and perform your due diligence, make sure that you want to and can purchase this house without risking this earnest money deposit. Once that due diligence date passes, that EMD then becomes hard. So by hard, I mean that once that you get past that due diligence date, this earnest money deposit, if you were to terminate, would then go to the sellers because you held the house tied up for longer than that due diligence period. It's usually 1 to 3% of the purchase price of the house. Now, that being said, I'll put it out there. I've had a lot of contracts in the last 3 years. We have lost the due diligence fee a couple times, but not often. It's probably, I think it's under 5% of transactions that I actually go under contract with will end up losing a due diligence fee. I've never had a buyer lose their earnest money deposit. I always make sure that we perform our due diligence and make sure whether they're going to purchase this house or not before the end of this due diligence period or this due diligence date. So usually I wouldn't stress about this earnest money deposit, but in order to put a house under contract, expect to lose that due diligence fee or close on the house. That's basically your two options. This earnest money deposit, same thing as the due diligence fee. It's not in addition to the purchase price. It's going to be a part of your down payment. So it's not an extra 1 to 3% of the purchase price of the house that you need to pay. It's going to just count as part of your down payment of the house. So hopefully that makes sense. That's kind of a really confusing part of the home buying process that I need to explain, but it's an important one, and a lot of people end up having a lot of questions about that. I'm going to open it up to questions just about the due diligence fee and earnest money deposit right now. I realized that was kind of a lot really quickly. So I'm going to give you guys a second questions on that. No questions. Either everyone is really confused and so confused they don't even know how to answer or ask a question, or they did a great job explaining it. No idea. Okay. All right. So if you have any questions on it down the road, you can, feel free to ask me. And when you get into submitting an offer on a house in order to purchase it, I go over all of this stuff again with you, and I can help make suggestions on what I think, what you should put for the purchase price, or what I think you should, or what I think you should put for the due diligence fee, earnest money deposit, etc. So usually your realtor is going to be able to help you with a lot of these decisions. But once again, it is still your decision at the end of the day on what you want to put. So tips for making a great offer. I just like to go over this because making an offer is kind of like crafting your best. It is, you have to craft that. Oh, we have a quick question from MD. To confirm, both end up going towards the purchase price. Yes, both your due diligence fee and earnest money deposit will go towards the purchase price of the house when, or I should say, if you close on the house. Let's go with when. Everyone's going to close on the house. Okay, good. So, tips for making a good offer or turning a good offer to a great offer. So, obvious one, increase the purchase price, self-explanatory. Makes a lot of sense. Raising the due diligence fee. So obviously, if you raise that due diligence fee, it's going to be more guaranteed money for the sellers. So it's putting the sellers to have less risk when putting in or by accepting your offer. Raising your earnest money deposit. This just shows you a stronger financial commitment to buying the home. In general, the due diligence fee is usually more important than the earnest money deposit to the sellers. But always raising the earnest money does make your offer a little bit stronger. Removing contingencies, essentially waiving the appraisal or buying it as is, etc. I always will err on the side of caution, especially for first-time home buyers on doing either of these items. But it is a really competitive market out there, and sometimes that is something I would have to do. But I would always be cautious about that. Next thing, shortening the contract length. The less time that the sellers hold the property, less expensive it is for them usually. So usually that makes it stronger. And then the final thing, don't write a personal letter. This is, something that maybe our parents did, but it tends to end up kind of falling under fair housing guidelines and, discrimination issues if you write a personal letter. You can write things and be very objective and be like, I really love the way this house looks, but including any photos or anything like that, I will not submit those for you. I will tell you to keep that because then I can put myself in a fair housing or discrimination issue. So don't write personal letters, even if your parents tell you to do so. So that's quick tips for making a good offer great. Zooming back out. That's kind of the offer process. Those are kind of major things, the important things in submitting offers. Right now in Mecklenburg County, the average house gets a little over 6 offers before going under contract, which is a lot. That's a lot of offers. That means that every house out there is getting a lot of interest. It's a really competitive market out there. When you're submitting offers on a house, don't get too discouraged if you get an offer rejected. It happens. Statistically, if the average house out there is getting a little over 6 offers, that means that 5 out of 6 people lost out. Statistically, you're going to have to put in 6 offers in order to get 1 accepted. So try not to get discouraged by it. Generally, I've found that I tend to only, I don't have, most people that I work with don't end up submitting 6 offers. We get them under contract sooner than that. No, I'm just making a plug for myself. Just expect that, submitting an offer, it's not going to be a one and done. The market's really competitive out there, so don't be too discouraged if you get an offer rejected. You just kind of have to shoot your shot right now. Questions on submitting offers? Any other questions on that? No questions? Anything? Moving along, we're going down, all right, we have the house under contract and we're getting into the due diligence period. So let's move on to step 4. All right, so you just got a house under contract, you got your offer accepted, you wrote that due diligence fee and you wrote that earnest money deposit. Now, what do? Well, you have to perform due diligence tasks. Due diligence is essentially just a fancy way of saying you want to make sure that this house is a good house and that you can actually afford to buy it. So what I recommend that you do, or kind of major things that you have to do, is number 1, I should put this in bold text and make this bigger, is the home inspection. home inspections typically run $400 to $700, depending on the size of the house that you're looking at. It is the most important part of the due diligence process. If you do not do a home inspection, I have to make you sign a waiver saying that you outright refuse getting a home inspection. Over the last 3 years, I have only sold one house without a home inspection. I made them sign that waiver so that they can't come back to me and be like, well, my house is broken. Well, you didn't get a home inspection. So get a home inspection. This is usually, we're going to jump into it in a second, but it's usually a long document and it is worth every penny. You should also get a wood destroying insect inspection, a radon test. Radon is the #2 cause of lung cancer in the United States. It is important to get your house radon tested. If there is radon, it is really easy to mitigate, but it is a colorless, odorless gas. It's naturally occurring, but it does cause lung cancer. So get radon tested, make sure that your house doesn't have radon. Well or septic inspection. This is essentially just, if you have a well or if you have a septic tank. If you're living, within really close to the city, odds are you don't have either of these, but you need to get them inspected if they do. Pool inspection, once again, only if you have a pool. Land survey, if you're buying a larger lot of land or you want to install a fence or something like that, you're going to need to get a survey done. This usually costs around $600. And then finally, home appraisal. So appraisal is kind of the big one. It's a big one that people like to talk about, and home inspection. So let's talk about those two, because those are kind of the big ticket items during the due diligence process. All right. The home inspection. First off, first thing to know, no home is perfect. New construction homes, I still have people get home inspections. No home is perfect, trust me. That $3.8 million house in Myers Park, it's not perfect. You're gonna get a 50+ page inspection report from from the nicest house out there, because the houses are never perfect. Don't freak out about this. Essentially, what a home inspection, they're gonna mark on there if like the outlet cover is cracked. It's like your little outlet cover. I don't have any outlets in the screen here, but if there is an outlet and it's cracked, that little outlet cover, inspection, it's going to be on that inspection report. It is the biggest thing about understanding, or the biggest thing about home inspections is understanding what on those 50 to 150 pages is a big deal versus a non-issue. And by that, I mean something that's like an outlet cover. That is something that, as a realtor, I sit down or I Zoom call with buyers and I go over this home inspection report with them. It's really important to me. And usually we end up with a list of items that we're going to go back to the seller and we're going to request for them to repair or compensate us for this issue. So you can use something called let's scenario. We go through the inspection report. We find that, there is a leak under the sink and a crack in one of the bricks outside the house that's concerning. So some people get freaked out because like, oh no, I'm under contract. I just have thousands of dollars tied up in this house that has a cracked brick. Don't freak out. We're going to use something called a due diligence repair request. And we're going to go back to the sellers, give them this inspection report and say, hey, this house has a couple issues that were unexpected and unknown based on that were unknown when we put an offer in on this house. So we can request for them to either repair these items or to compensate us for these issues. Let's say total repair costs of everything that we found in this report was $2,100. We can request for them to basically pay for $2,100 of our closing costs. And then we have the money in order to do those repairs once we own the house. Or, we can ask them to, go and fix these problems and we'll re-inspect the house. And then we're buying a fresh house that has the issues that we are concerned about repair. So don't freak out about the home inspection. That's you can ask for things to get repaired, and sellers tend to expect that. If they say they're selling the house as is, generally there's no legal documentation on what as is really means, so that they can, they're probably not willing, when they say as is, they're not going to be willing to make any of the repairs, but they might still be willing to compensate you for that. So still, even if they're selling the house as is, get a home inspection. It is worth it. So you perform the home inspection. We negotiated back with the sellers on that. And we're all happy with that. The next thing that's going to happen is what is the appraisal. Now, in a market where housing prices are rising quickly, I think year over year in Charlotte, we went up around 20% over the last year in housing prices, which is insanity. It's not going to continue doing that. It's not going to decrease in value, but we're going to continue. That has to slow. But generally, when the house value or when home values are increasing quickly and you have to offer above what the list price is, people freak out about appraisals. An appraisal is a third-party opinion of the home's value. A lender will only lend up to the appraised value of the house. So what that means is that if your house is under contract for $310,000, the appraisal comes, I'm so sorry, I have this example right here. You have a house under contract for $275,000. The appraisal comes back at $265,000. There's a $10,000 difference in between the two of them. You, as the buyer, must come up with that extra $10,000 at closing, or we must negotiate the contract. Because the lender will only lend up to that $265,000. And another thing that some people get tripped up with is the lender, let's say you're doing a 10% down payment, so the lender is lending a 90% of the home's value. So they will lend only up to 90% of the appraised value. So they'll lend up to 90% of the $265,000. So hopefully that's helpful. But yeah, once you have a discrepancy in appraisal value, the buyer will have to either cover the difference or we have to renegotiate the contract with the sellers. Typically, whenever I'm helping someone purchase a house, I have them I'll perform what's called a CMA, or a comparative market analysis. And this is essentially me acting as an appraiser, and I'm trying to figure out what the appraiser is going to appraise the value of the home at, so that I can give you an upper limit of what I think the max appraisal value could be, and where I think that we're risking potentially not having this house appraised for our contract value. I always give that, because it's important for a buyer to know, if you absolutely love a house and you're just like, oh my gosh, this house was listed for $300,000, but we want to offer $375,000. I'm going to tell you that it's going to not appraise, or by how far off that appraisal mark I think you are. And then I'm going to advise you to probably only offer up to what that appraisal value is, or what I think that appraisal value will be. Now, I'm not always 100%, because appraisers are different. They vary. Each appraiser is different. It's a third-party opinion of value. I can't predict it exactly, but I can give you a good estimate of what I think it's going to be worth. So that's appraisals. Don't get hung up too much about them. I haven't had an appraisal issue in, I think a year and 4 or 5 months now at least. So, it's not like everybody out there is having appraisal issues. Trust me, it's not that big of a deal. I'm going slow. Okay, so home inspection costs. Final thing on this slide under due diligence, the inspection costs. Home inspection, roughly $300 to $500. I quoted a little bit higher there earlier. Sorry. Radon tests, $75 to $100. Wood destroying insects, $50 to $100. Land surveys are usually $400 to $600. Expect to spend about $1,000 on your due diligence process. Just budget for that when you go under a contract on a house. Questions on due diligence? I just realized that at 6:30, I think I told you guys this is only going to be an hour, but I guess I talked a little bit too much here, so sorry. These next two are the shortest of the two. We've covered most of the home buying process. 5 and 6 are easy. Any more questions based on the due diligence period? Nothing, okay. We'll move on to step number 5 out of 6, almost there. closing preparations. This is essentially, so we're beyond the due diligence period, so that earnest money is now hard. So if you're to terminate contract, that earnest money, you wouldn't get that back. I'm just trying to reference that earnest money and due diligence fee. Always a confusing thing. Don't worry if you still don't understand it 100%. So closing preparation. During this time period, after we finish the home inspection, the final things that we need to do is essentially ensure that we get mortgage approval. So don't make any large purchases while you're under contract, because even though you have pre-approval, that doesn't mean that you're finally approved for the purchase of the home. They will pull that last debt to income ratio like literally 2 days before you actually close on the house. So don't go out and put like $12,000 of furniture on a credit card. That could ruin your debt to income ratio and ruin your ability to purchase this house. So trust me, stuff like that happens. Don't go out and buy a new car. Don't, or if you are, call your lender and ask them, hey, can I do this? Just don't make major purchases when you're under contract. Trust me. Also ensure that all documents that the lender are asking for are given to them. If they ask for X, give it to them ASAP. Just try not to hold up the mortgage process. They have a lot of hoops to jump through to make sure that they can give you $250,000 on a day. So just that's ensure mortgage approval. Next step would kind of be transfer utilities, water, gas, electric, sewer, internet, basic. This is usually pretty easy. Step 3, get homeowners insurance. This is also pretty easy. I can give you contact for that, or just call your auto insurer and get that insured. The next thing that you're going to run into about 3 days before closing is going to be something called your closing disclosure. This is a 4 to 5 page document that goes over every financial aspect of this home purchase. So essentially it'll go over the loan amount, interest rate, what your monthly cost is, and then it will break down all of the costs to purchase this house. So all of the attorney fees, like every line item on that attorney fee, every line item on the for the lender fees as well. So it'll break down all of that for you, show you exactly where all the money is going. And the most important thing on this closing disclosure is going to be this cash to close right down here. It's going to be on the first page, bottom of the first page, cash to close. This is the amount of money that you need to bring to the closing table in order to get the keys to this house and to officially be a homeowner. This amount, is what you're going to have to wire to them typically. Typically, they're not going to accept a personal check. You're going to have to wire it to them. So you need to bring it to the closing table. You're going to get this 3 days before. You're going to have to review this and then sign it and send, or I guess like review it. And we'll then sign like 5 copies of these at the closing table. But this very important document, as your realtor, or if I will be your realtor, I will sit down and I will go through this with you. And I also, outside of that, I get a copy of this and I double check all of the math to make sure that there's no errors. You'll be surprised. Sometimes there's small errors on there, but $1 here and there, it's important to still catch. That's the closing disclosure. And the final thing I need to go over is that if you're wiring that cash to close, which is usually a lot of money, I need to talk to you about wire fraud safety. So in 2019, there were 11,677 documented cases of real estate wire fraud, resulting in a loss of $221 million. Yeah, that's a lot of money. Wire fraud is real. When you are under contract on a house and you're getting close to the closing period, if anybody asks you to wire any money, call your realtor and call your closing attorney to confirm with them what you are wiring and where you are wiring it to. Don't just wire money willy-nilly, because there are a lot of phishing emails that go around. It is a heavily targeted aspect of wire fraud and essential financial fraud out there. But yeah, just talk to your attorney and talk to your realtor on the phone before you're wiring money. You're going to be wiring this money a day or two before the closing. Just important to be safe about it. So that's the closing preparation. That's probably the easiest step, and kind of in the interest of time, I'm just going to go right into the next step, which is closing on the house. This Super easy. Closing process takes a day. Oh, my cat's here. What's up, bud? Yeah, I'm so sorry. You're gonna put him down. Sorry, guys. So closing, where was I? The day before, you're going to wire that cash to close amount to the closing attorney, or 2 days before, whatever. And the day of closing, which is that settlement date, you're going to do something called a final walkthrough. This is a walkthrough that we essentially look at the house, make sure that nothing has changed or nothing is different than we expected from when we went under contract on the house, or make sure that any repairs were done. And then we're going to go from that final walkthrough. We're going to take some cute photos for Instagram. Duh, got to do it. And then we're going to go to the closing. And then we're going to go to the attorney's office and we're going to go do the closing. Closing usually takes 30 minutes to 2 hours. It's basically you just signing a lot of documents that you've probably already seen before. But especially if you're getting a mortgage, it's going to be a lot of documents. If you want to read all of them, you'll be there for 4 hours. But the attorney will sit there with you and they will go over everything with you. If you have any questions, ask them. They will answer it for you. If you want to willy-nilly sign everything immediately, you could probably be in and out of there in like 10 minutes, but like honestly, 30 minutes to 2 hours. Just expect that. From that point on, it takes in Mecklenburg County, we have to record that closing. So we have to send it to the tax office. And that usually takes a couple hours. But once we send it to the tax office and it takes a couple hours, you are then officially a homeowner in Mecklenburg County or North Carolina, and you can start to move all your stuff, which kind of sucks for some people. But yeah, congrats, you're a homeowner. Pop the champagne. That's kind of the entire process. Closing procedure is really easy. It's usually a pretty exciting day. Isn't it? It is just an exciting day. So you worked really hard to get to step 6 here, and that's kind of final celebration. You just have to sign a lot of documents. So that's kind of the home buying process. Questions on 5 and 6? I guess we're gonna go right into this here, the contact page. This is my information again. I'm a broker or North Carolina realtor. That's my phone number. It literally goes to my phone right here. 484 area number because I grew up in Pennsylvania. I live right here in Charlotte, Beverly Woods, but I still have the same phone number. That's my email address. Feel free to reach out to me anytime. Check out my website. Also follow me on Instagram. I highly recommend it. I'm obviously very biased, but I do a lot of house tours on my Instagram story. They're really fun. And it's a good way to kind of get an idea of what's going on in the Charlotte market. Here's Taylor Craig's information as well. I will send you, he's also on Instagram, but I'll send you his contact information in an email. I really appreciate everybody sitting through this presentation, and I hope you learned a lot. If you have any questions, ask away right now. And if you don't have any questions, I can go eat dinner. You did a great job by learning a lot about the home buying process. I really look forward to working with you if I can to help you find the house of your dreams. If you are looking to purchase a house in the next, year, reach out to me. Let me know. I can help you kind of start the process. Even if you're a year out, it's always good to start looking. I'd love to kind of help build that relationship that you have kind of a friend to go through this entire process with. So I really appreciate it. Thanks for sitting through this. I get pretty passionate. I'm pretty excited about this home buying process. So sorry if I was really excited, but it's an exciting process. Questions? No questions. That's okay. If you don't have any questions, yeah, I appreciate everyone. Thanks for coming out. If you don't have any questions, I'll send you kind of a follow-up email, but the same thing, I'll also send you an email with this recording. So if you want to rewatch it or rewatch sections of it, feel free to do so. And if you just have any other questions, just give me a call. Literally my cell phone, or you can text me. But I really appreciate it. Thanks everybody for coming out. I'm gonna end the webinar now. Thank you.
Thank you.
Yep, thanks, Pat.